This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. The show begins with Dan O'Brien, K-State Grant Economist, and Guy Allen, the Senior Economist from the IGP Institute at K-State, with a recap of the World Agricultural Supply and Demand Estimates from the USDA. In the first two segments of the show, they discuss the international and domestic market for corn, soybeans, wheat, and grain sorghum. K-State meteorologist Chip Redmond completes today's show with a weather update. He talks about a record these recent cold temperatures broke and what people can be expecting as we look into next week and the end of the month. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. However, this time we're joined by K-State Grant Economist Dan O'Brien and the Senior Economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
The World Agricultural Supply and Demand Estimates report came out this past Friday, and so wanting to talk through a few of those things. And first off, corn had some big movers.
Yes, the market ended up, saw the information that came out of that corn report and was down 10 cents on the upfront markets. If they were only looking at the announcement on the yields alone, they would have probably gone down more. But the USDA raised corn yields to record high level, 177.3 bushels per acre, but they, at the same time, cut back on domestic harvested acres. So we ended up, coming into that report, had been seeing USDA report about 15.23 billion bushels, ended up, they added about 100 million bushels to it, to 15.3. And of course, when they did that, there were some issues that changed domestically in terms of usage to compensate for some of that. There was an increase in feed residual usage, about 25 million. Ethanol usage bumped up the estimate about 50 million bushels. No change in exports. By the time they went through all of that in that balance sheet, they ended up and had ending stocks up about 30 million bushels, up to 2.162 billion. There were some back changes in the previous marketing year too that came into play, but just kind of reshuffling the deck and moving things around a bit. There was also a requisite 5-cent decline in the USDA's projected season average price down to 4.80, and the ending stocks up a little bit to about 14.8. I think that most farmers, as they saw those numbers, were surprised by the yield figure and were scratching their heads about the changes in how the acres and the yields move back and forth. So I'm not critical of the USDA NAS at all. What it does show, though, is that we are, to some degree, we've been topping out, Guy, on our yields, our U.S. average yields. And some of that has to do with expansion of corn acres off into areas that aren't right in the heart of the traditional corn belt. But still, you've got a situation where we've ended up and had a report that if anything, just encouraged or supported the idea right now that the market has that, hey, we have more than adequate supplies. We're over 2.1 billion bushels of ending stocks in this marketing year, and not going to really get excited until new news comes. And that new news might be what Guy's going to talk about on the international market, on how things could go overseas and what we might run into in the spring with any planting issues. Guy, what do you think on that?
Quite similar, Dan, in the world situation. We saw world ending stocks increase 10 million metric tons to 351.7 million metric tons. That's up 21 million metric tons from last year. So we're feeling a bit comfortable, and that's what the market's been telling us. Virtually all those ending stocks, and that was coarse grains, total coarse grains, all of that increase came from corn. And the big change in corn was USDA raised Chinese production by 12 million metric tons. That was in the wake of a wet year where we thought maybe they'd lost some acres in that, but I guess rain makes well, and that went into their feed number as well as into their into stocks number there. In the wake of that, what I'm sort of focusing on is Chinese corn imports. So look, Chinese corn imports remained unchanged in USDA numbers. With that 12 million increase in production, I'm a bit skeptical that they're going to remain that high. Last year, we saw Chinese imports at 18.7. So I wouldn't be surprised to see that those imports wane. And that's not going to help these U.S. markets really at all. On the other export situation, Brazil crop was reduced by about 2 million metric tons, 54 million, 3 million less than a year ago. Be a little less corn, but with Brazil, they've been pricing very, very competitively, and there still seems to be some corn to come out of Brazil.
I think when they look at that international situation, that we've been paying so much attention to Brazil and in-country forecasts of even greater cutbacks than what the USDA had shown here. So on the one hand, it makes me, I guess, anticipate what will happen in the February, March, April reports as we get more information on that crop. And the other side of the coin is just a tremendous crop where you talked about rain makes grain. Well, in Argentina, that's what they're counting on. 2 years ago, they were at 49.5 million metric tons. Last year, they had dry problems down to 34. Well, this year, they're projecting 55. It seems that one reason that a lot of the markets aren't that excited yet about what could happen in Brazil is the anticipation of just a tremendous crop coming out of Argentina. And also, Guy, you and I watched the Ukraine numbers. Do you have any thoughts on what's happening in Ukraine in the international corn market side?
On the corn situation, not too many changes on that. Wheat situation, I think when we get to wheat, we'll talk about the Ukraine and Russia a bit more detail there.
So overall, the world stocks were at, with all the hand waving and everything that's just gone on, world stocks were anticipated at 26.1% in December, now at 26.85, about 26.9. So some increase. It's not a 5% increase, but it is a marginal increase. And really, world stocks outside of China are just about unchanged. So, Guy, what you mentioned before about the anticipation of about just under 12 million metric ton increase in China, that's a big thing. So, again, market analysts sitting here watching all of this, trying to weigh all that business, and I don't think that they're inclined to act, or they haven't shown any sign that the market is inclined to act until there would be tangible major losses, somewhat far beyond what the USDA acknowledged in this report there in South America. And there is the issue of the safrinha corn crop and dry conditions down there, and intermittent dry and wet. Anticipation of dry coming still holds the opportunity to affect that crop. So I guess Shelby, when I think of this stuff, I wonder about Kansas, U.S. farmers holding grain. I think the stocks numbers indicated that there's a lot of people holding grain, holding corn. In fact, Guy, I know you've been watching that close in terms of corn stocks being held and where that goes. So I wonder if we're holding quite a bit of grain, what this report does to give those folks some guidance on what to do.
The interesting on corn stocks, and it wasn't surprising, 80% of those stocks were held by growers. And we saw that in the middle of gut slot harvest in October. There was a couple days there where barge freight on the Mississippi River dropped quite hard. And that's when the Chicago price had come off those days as well. And I took that as a signal that the U.S. corn grower just decided price was too cheap. He wasn't going to sell. A lot of the country elevators weren't able to put on as much company-owned grain as they would have liked because we didn't have farmers selling. And that was definitely reflected in this stocks report, that the farmers holding the biggest chunk of inventory today. And it's going to take a flat price move to get him to shake that loose rather than just a move-in basis.
And that's probably the singles and doubles type of a strategy that farmers will employ. They'll hold until they get 5-10 cent increases, but so they're holding, waiting for that. They wish they had a 45-cent increase, but we might have to take nickels and dimes and quarters to get there. In the moments we have left on this first segment, should we talk about grain sorghum, Shelby? Would that work out?
Absolutely. What are we seeing on the grain sorghum front from the WASDE report?
Well, not much change in the balance sheet on a straight-up manner. Exports began coming in at 9.5 million bushels in this last week, are kind of feed grains anyway, and wheat. Their grain sorghum exports doing by far the best. So the USDA did raise the grain sorghum export number from 220 to 230 million bushels. A few other minor changes, a little bit of a cutback in looks like ethanol usage, basically feed, seed, and industrial usage, and stocks whittled down a little bit. No change in price. So So overall, we plant grain sorghum in areas here in these western plains that tend to be droughty. That crop fits well in that niche. Generally, grain sorghum for a market sells as a competitive feed grain until these moments when you get Chinese demand for beverages and other things coming in and really having sorghum separate itself from corn. Guy, I know you watched that China sorghum connection. Any comments on that?
Yeah, look, that Chinese imports came in for the first quarter better than expected. It's kept the price of sorghum quite attractive. This is probably the brightest spot in the whole coarse grain situation. I expect it to continue to be strong. Sorghum's going to continue to price itself out of feed rations, out of the ethanol market, and we're going to see the biggest percentage of grain sorghum, no matter where it's produced, move to that export market at these premium prices.
Any additional thoughts you'd like to share with our listeners?
We saw the Baltic Dry Index come off a bit in the last couple weeks. I think that's reflective of sort of waning demand, particularly in the wake of the shipping problems we're seeing not only in Panama with the drought and the restriction of transit through the Panama Canal, but also looking at that Red Sea Suez Canal situation with the conflicts increasing there. That generally would be raising freight rates across the board internationally. But the fact that the dry bulk index has been coming off sort of really indicates to me we're seeing a bit of waning demand, not just for grain, but for coal and iron ore, which are the two big drivers there. With those challenges in both Panama and Suez Canal, it is significantly increasing the transit times and the routes across all those commodities that have to take alternative routes. And when you're competing, like in Panama, for slots to go through the canal, those high-valued container ships are going to take priority than something hauling iron ore or grain, which are cheaper commodities compared to manufactured goods.
That was the senior economist at the IGP Institute at K-State, Guy Allen, and he was joined by K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but when we come back, we'll continue our conversation with Dan and Guy. You're tuned back into Agriculture Today, and we continue our WASDE conversation with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, as we continue our conversation, now wanting to talk about soybeans.
The same issue with yields being put higher and harvested acres being scaled back that occurred for corn also occurred for soybeans. It wasn't quite as pronounced in terms of the yield jump. The USDA did project yields at 50.6 bushels per acre. It wasn't a record. Some higher number came in like a couple of years ago in 2021, but still a pretty strong number, over 50 bushels an acre. And at the same time, cut back the harvested acres figure, from 82.8 down to 82.35. So did cut that back, and production number ended up about 36 million bushels higher. Supplies about 31 by the time we adjusted for some stocks changes. And really, for the rest of that supply-demand balance sheet, hardly any changes. We did see soybean crush move to the high side, and Guy and I have both been watching the international oilseed markets. So higher crush here in the U.S. Gives us opportunity to use DDGs elsewhere to perhaps ship some soybean oil. We shall see. Crush ties in also with renewable fuels, renewable diesel, biodiesel production. So you've got all that happening. And by the way, when you do jump down into the soybean oil supply-demand balance sheet, I saw about a 200 million pound increase in biofuel usage of soybean oil. So again, the same issue continuing on with the development of biofuels on the oilseed side. We're having more and more of a domestic focus in the soybean sector. And guys, some of the issues with regard to where stocks are held, at soybean stocks on farms about 1.45 billion bushels, soybean stocks off farm at 1.55. Quite often, I think we would have seen more on farms, more movement off of farms into commercials. Do you have any thoughts or insight on that?
Well, I think the farmer, when he quit selling corn, I think they did continue to sell soybeans a bit, and soybeans were the preferred sale there. So that doesn't surprise me. Just to back up a bit, your comment on soybean oil, note your increase in biofuel uses. There's a drop of 50 million in soybean oil, drop in exports to 300 million pounds. Look, U.S. is likely to become a net vegetable oil importer this year with that biofuel demand. So quite a change in the dynamics of the U.S. crush as that continues to grow, but then the switch to export more meal on that. Changing over to world situation on the oil seeds. Look, ending stocks increased slightly, 400,000 metric tons to 14.6. That's up a bit from last year, which is 102 million metric tons. That's a bit comfortable. It's still tight, but look, it's the market's feeling increasingly comfortable here as we grow those ending stocks across the commodity complex. Surprising thing was USDA left China numbers unchanged. They're still showing China imports at 102 million metric tons of soybeans. Their crush has been sort of lagging in the last few weeks, and I just question whether we're going to see 102 million metric tons of exports, particularly as that reflects on U.S. demand. Our demand has been very, very sluggish with cheap Brazilian soybeans specifically and Argentine soybeans there as well. It's going to be interesting to watch the change of leadership in Argentina and how that's going to make an economic impact. He's threatened to drop the export taxes as well as, he's starting to back away a bit from the dollarization of the Argentine peso there. But a lot happening outside of the commodity markets that's going to impact oilseed.
You talk about Argentina and the that same pattern that we saw in the corn market between Argentina and Brazil as we went back and forth, and this trend in Argentine production. Again, 2 years ago, Argentina just under 44 million metric tons. Last year, major drought down to 25. This year, back up to projection of 50 million metric tons, and that's up too in this year. So again, a lot of our focus is on Brazil, and I just would reiterate in-country estimates are basically for drops from at least as much. Here, the USDA dropped the Brazilian figure from 161 to 157. There are in-country estimates of that and more later. So again, I think that uncertainty will have to be worked out, and we'll see where February, March, and April for the USDA reports take us in that. Elsewhere, Guy, you had an interesting comment. That will be a net importer. Question, where's it going to come from?
Well, wherever the cheapest oil is, it could be a lot of it's coming in the used cooking oil and other oils. That used cooking oil feeds into that market there as well. But yeah, It's going to be interesting. Canada is, I think, a prime opportunity there with their large canola production and canola crush. Expect to see probably the first stop just to be to the north as canola oil comes in.
You mentioned canola. Canola, there was a winter wheat and canola seedings report. Of course, in Kansas, we paid most attention to the wheat report. We'll talk about that. But on the canola side, they did show basically an increase from 2023 to 2024 of up to was about 1,500 acres up to 3,000 acres. The largest states for canola production, of course, North Dakota, 1.9 million acres, followed by Montana and Washington. So we have plants being developed in the state that'll take that on. So I don't doubt that's just the tip of the iceberg for where we're going with that. In terms of planted acres, the acreage numbers for winter wheat for 2024 plantings, basically that were seeded this last fall, were down about 6%. The Kansas numbers for winter wheat seedings were at 7.5 million acres. It's interesting, we were at 7.3 2 years ago million acres planted, 8.1 a year ago, and now it's 7.5. So we're down 7%, but we're kind of bouncing within that range. Of course, when a lot of us look outside our windows, we see blankets of snow, and if you're a wheat farmer, Guy, I think you had the statement before we came on the air about what the snow is doing right now for winter wheat.
Yeah, well, it's sitting under a nice blanket of snow here in Kansas, which, given our lack of precipitation, it's good to see that nice blanket of snow. It is keeping the wheat warm, although it's quite chilly here in Manhattan, Kansas.
Just in talking about the wheat supply-demand balance sheet, not a lot of major changes for wheat in that balance sheet. You did see a little bit of a decrease in beginning stocks off of the balance sheet last year, in the 22-23 balance sheet changing, and 23-24 affected by it. And really, that decrease led to a little bit lower stocks use, down from 35 down to 34.5. So not a lot of changes there. We did see the feed residual number for hard red spring wheat decreased, down 5 million bushels, 10 million up for soft red winter, 5 million down for white. And really the thing that I noticed most for hard red winter that we grow here in Kansas is that the decrease in exports. We were at 224 million bushels of exports in the last marketing year for 2022-23. We're holding steady at 145 this year. So there are a number of international factors, and that guy you can comment on, probably coming out of Brazil and Ukraine, that have affected the competitiveness of Kansas hard red winter wheat and U.S. wheat overall. So go ahead and talk to that if you'd like.
Yeah, just to run through some of these wheat exporting countries, Russia production was up 1 million metric tons to 91 million metric tons, and their exports were 1 million tons higher at 51 million metric tons. That ranks as the highest ever. Ukraine was up just under 1 million metric tons from the December number at 23.4. Exports increased by 1.5 million metric tons to 14. So despite where that grain may be actually grown, quite a bit of wheat coming out of that Black Sea market, even though the conflict continues there. Just elsewhere in the world, looking down at Canadian production, it was unchanged at 31.9 million metric tons. Exports up 500,000 metric tons to 24. That's compared to 25.5 last year. European crop production was unchanged at 134 million metric tons. Exports down slightly. One area I'm sort of watching is Australia. It was unchanged at 25.5 million metric tons compared to last year's record crop of 39.7. Exports were raised by 500,000 tons to 19. The thing I'm watching in Australia, they're getting some summer rains in some areas which are usually particularly dry in the summer, and that's more of a La Nina situation than an El Nino situation. But I think they're setting up for a very big wheat plant down there in a couple months as they move into their planting season. So keeping an eye on that.
Looking at these wheat markets, and I think wheat producers are certainly fair to ask, when might this wheat situation turn around? And Russia sounds like, and I'm not saying this it just is what it is, in the area that they've overtaken of Ukraine, they're farming it. They're farming it. So they've increased their ag land mass, and it's showing in these quantities. I have been watching the weather maps in that area, and depending on which one you look at, some show a little bit of dryness, others show a fair amount. So I think that the world is becoming dependent on very cheap wheat with very cheap currencies for both those countries. And really the one thing that might change that would be just something other than this remarkable run of great crops that they've been having, where they've been able to just pretty much flood. Well, flood is probably a non-economic term, Guy, but they've certainly increased the supply coming into world markets, and all these other countries, including the U.S., having a hard time competing with them.
That was K-State grain economist Dan O'Brien, and he was joined by the senior economist from the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update. And as always, we're joined by K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, we've had quite a few hours of below freezing temperatures.
Yeah, we've run about, this cold spell has gone greater than a week now. We're at about 10 days and looking like we're going to end it probably around 12 to 13 days. And we've gotten pretty darn cold during that period. In fact, it was highlighted by Sunday and Monday where we saw high temperatures not get above zero for a big chunk of the state. And we saw low temperatures as low as negative 22 in the Northwest. So really, really cold air in place, true Arctic origins, and as that lobe of the polar vortex has been kind of just chilling over the central and northeast part of the United States. It's also pushed a storm track to our south as well. So any of those temperature contrasts have been to the south, and we've been just pretty prominently stuck in the north of that jet stream and cold.
Did some of those cold temperatures break some low-hanging fruit records, as you call them?
Yeah, I call them low-hanging fruit records because we look at daily records, and every day there's a record high and a record low. Then there's record warmest low and coldest high. And some days they make sense. Like this time of year, we're at the end of the coldest week of the year climatologically for the state of Kansas. And the record low temperature would be -13, -12, -9 on each consecutive day, similar. But occasionally you get this random day that's like 4 or 5, above normal. And so we picked off one of those on Monday in the Manhattan area with the coldest warm temperature in the afternoon. We didn't get above freezing. We were at -1. And we broke some others that were further west that had short climatologies for record coldest daily record. So some low-hanging fruit records, as we call them, but they were records broken, and means this was a historical period. It still pales in comparison to 2021, where we spent, right now, as we record this, we're over 180 straight hours in the Manhattan area being below freezing. A lot of folks broke that earlier this week when they got above freezing in central and southern Kansas, but we need to go 30, 40, even 50 days before we really set true records of days that we didn't reach freezing. We're also looking at snowpack as well, as we've had 4 inches of snowpack in most of northern Kansas for about a week and a half now. We have to get to 40 to 50 days before we start breaking records for snow depth in the duration. So nowhere near significant records, but it's been cold nonetheless.
Are we expected to continue to be cold?
Yeah, cold temperatures are going to stick around for another about 24, 48 hours. We had a cold front come through Thursday night and a Friday morning that brought a renewed push of cold air. That's going to last until about Sunday morning. I think Saturday morning will be the coldest. We'll see -10s probably in northern Kansas, and a little bit warmer as you get further south. That should come to an end pretty quickly with some pretty strong southerly flow that's going to develop Sunday and into Monday. And we'll see temperatures get above freezing for most of the state, I think. Snowpack will probably hold temperatures back a little bit. I think forecast modelers are a little aggressive. They tend to not handle cold and related cold air due to snowpack very well, just because it's such a thin layer at the surface. But as we move into next week, it looks like everyone will definitely get above freezing by early next week. And then we look at a pattern change that we've had a pretty potent Pacific jet that's retracted over the last 2 weeks, and that's helped us bring that cold air southward. Well, now it's coming back to the east. It's going to bring southerly flow across most of the United States with warmer and more moist air across the CONUS, the same kind of pattern we saw in mid-December, which kind of seems to me a little bit of pattern recognition, maybe a reloading of the pattern. We'll see warmer temperatures and some chances of precipitation in the liquid form. But then I start to think further out, if we do retract, like some of the models say, we may potentially retract that jet stream again, that El Nino enhanced jet stream by early February. We might be setting ourselves up for another lobe of the polar vortex by mid-February. So it just kind of a little bit of a cycle there thanks to El Nino. And there's a lot of things that need to fall into place. We need the polar vortex to break off and move south. We need a sudden stratospheric warming event. There are hints at that, but we're not quite seeing nearly as much agreement as we saw for January. So as a result, February is looking like it'll end up being near normal. We're warmer than normal in February. We'll probably have more precipitation. But if we're colder, we'll likely have less. So equal chances for precipitation as well in February.
That was K-State meteorologist Chip Redmond. That's all we have for you today on Agriculture Today, but we'll be back with more for you on Monday.